Hello, and welcome to Future Development Insights. Here in Real Estate Things, and I'm thrilled to have you join us in this series dedicated to uncovering high-growth investment areas. If you're looking to stay ahead of market trends and identify the next investment hotspots, you're in the right place. In this series, we'll explore powerful strategies and tools that can help you make smarter investment choices. Our goal? To arm you with the insights needed to identify future development areas before they're widely recognized. Each video will be packed with practical tips you can apply, whether you're a new investor or have been in the game for a while. Throughout Future Development Insights, we'll cover essential topics like understanding zoning changes, tracking infrastructure projects, identifying retail growth, and recognizing patterns in public amenities like schools and parks. All of these factors can signal areas with high potential for growth. Each episode is designed to be enjoyable, around 3 minutes, so you can easily learn something new, even on a busy day. And every episode includes actionable steps and real-world examples, giving you a clear path to start researching your own investment opportunities. So, grab a notepad or your favorite device to take notes, because we'll be diving into topics that can make a big impact on your investment journey. Now, why does spotting growth early matter so much? Well, areas that attract development often see increased property values, new business opportunities, and a more vibrant community life. Recognizing these changes ahead of the curve gives you a significant advantage, helping you invest with confidence and maximize your returns. Over the next episodes, we'll show you how to access planning documents, monitor zoning trends, and even track new infrastructure projects. With these insights, you'll be able to see beyond the current landscape and envision what an area might look like in the next 5 to 10 years. So, whether you're interested in real estate, planning your next investment, or just curious about city development, this series is made for you. Let's unlock the potential of future development together. Thank you for joining me in Future Development Insights. Be sure to subscribe and hit the notification bell so you never miss an episode. In our next video, we'll dive into one of the biggest indicators of growth, zoning changes. See you. Over the next episodes, we'll show you how to access planning documents. Welcome back to Future Development Insights. Today, we're focusing on one of the most reliable indicators of future development: zoning changes. Zoning regulations shape how cities and towns evolve, and changes in zoning can give you an early hint about where development is heading. First, familiarize yourself with local zoning plans. You can usually find these through the city or county planning office or their website. Zoning determines which land can be used for residential, commercial, or industrial purposes, and any recent changes are often signs of upcoming development. For example, if a previously residential area is rezoned to mixed use or commercial, it's likely that new stores, restaurants, or housing developments are on the way. Another great resource? Public planning meetings. Local governments often discuss zoning changes, new developments, and public projects in these forums. Attending or watching online can provide first-hand insights about which neighborhoods may soon see investment. These meetings are typically open to the public, so keep an eye on city announcements. Finally, use online zoning and planning tools. Many cities now have interactive maps that allow you to view zoning updates and future land use plans right from your computer. Look for areas that are zoned for high-density development or commercial projects. These spots often attract more investment and, consequently, better property values. That wraps up today's episode. Remember, zoning changes can provide a clear roadmap of a city's development intentions. In our next episode, we'll dive into infrastructure projects and why they're one of the best signals of future growth. Be sure to subscribe and hit the notification bell so you don't miss out. Welcome back to Real Estate Things. Today's focus is on one of the best predictors of future growth: infrastructure projects. Infrastructure, like new roads, schools, and public transit expansions, often serves as the foundation for future development, creating more housing and business opportunities. To start, look for key infrastructure upgrades in the area. Road expansions, new transit lines, and utility upgrades all make it easier for people to live and work in an area, increasing its appeal. For example, if a new subway line is planned, properties near those stations often rise in value as they become more accessible. Next, check local government and city planning websites. These sites often publish long-term plans detailing upcoming projects and budgets. Look out for new schools, parks, and medical facilities, as these indicate the city's focus on growth for specific neighborhoods. Finally, use real estate databases like Zillow or Redfin. They often highlight rising property values due to nearby infrastructure improvements, allowing you to spot these trends early and make proactive investment decisions. That's all for today's episode. Infrastructure projects lay the groundwork for growth, so keep an eye on these as they often signal high-potential investments. In our next video, we'll explore identifying retail and commercial development opportunities. Be sure to subscribe, and don't miss out. Welcome back to Real Estate Things. In today's episode, we're diving into retail and commercial development opportunities. Tracking retail expansion can give you strong signals about an area's growth potential, as new stores and commercial spaces often indicate rising demand and growing populations. To begin, watch for large retail chains or grocery stores planning new locations. When a major retailer invests in a neighborhood, it's often based on extensive market research that shows long-term growth potential. For example, a new grocery store typically reflects an expanding local population. Next, explore local business news. Follow announcements about new shopping centers, restaurants, or commercial plazas, as these developments can elevate an area's desirability and property values. Business journals, community websites, and local government announcements are great sources for this information. Finally, pay attention to mixed-use developments, which combine residential, commercial, and sometimes office spaces. These projects create lively, walkable neighborhoods, making them very attractive for investment. That's a wrap for today. Retail and commercial development can be powerful indicators of a thriving area, so keep an eye out for these opportunities. In our next episode, we'll focus on public amenities like schools and parks and how they impact investment potential. Be sure to subscribe, and don't miss out. Welcome back to Real Estate Things. Today, we're looking at how public amenities, like schools and parks, impact investment potential. These types of developments often indicate a family-friendly area and can significantly boost property values over time. Let's start with schools. High-quality schools are a big draw for families and can make neighborhoods much more attractive. If you see new schools being built or existing ones expanded, this could be a signal that more families are moving in, increasing housing demand. Next, keep an eye on parks and recreational facilities. Public green spaces create a higher quality of life, and areas near parks often see property values increase. When a city invests in new parks or upgrades existing ones, it often reflects a commitment to community development. Finally, watch for healthcare facilities. Hospitals and medical centers provide essential services and create jobs, which can drive demand for nearby housing. Areas with access to quality healthcare are typically more desirable. That's it for today's episode. Public amenities like schools, parks, and healthcare facilities don't just serve the community, they add significant value to surrounding properties. In our next episode, we'll recap key signals and strategies for identifying growth areas. Don't forget to subscribe so you don't miss it. Welcome back to Real Estate Things. Today, we're looking at economic indicators that impact real estate value. Factors like employment rates, income levels, and population growth are key to understanding an area's investment potential. To start, look at the area's employment rate. High employment often boosts demand for housing and increases property values. You can find this data on government sites like the Bureau of Labor Statistics, which provides employment statistics by region and industry. Next, Consider income levels. High average incomes suggest that residents can support higher housing costs, which is a good sign for real estate investment. Check census data or real estate databases for median income figures and look for areas with steady or increasing income trends. Also, look at population growth. A growing population signals housing demand, which can lead to higher property values. Check census data and local government reports for growth trends and projections. That's it for today's episode. Understanding economic indicators can help you identify promising investment areas before they're fully developed. In our next episode, we'll explore risk factors in real estate investment and how to mitigate them. Don't forget to subscribe so you don't miss out. Welcome back to Real Estate Things. Today, we're going to break down how to research local real estate markets, which is key for making smart investment decisions. Understanding a neighborhood's trends, demographics, and future growth potential can make or break a property's value. To start, look at the demographic profile of the area you're interested in. Is the population growing? Are there specific age groups or family sizes increasing in number? Sites like the U.S. Census Bureau or local government data portals offer up-to-date statistics that can show you if an area is attracting new residents or if people are moving away. Next, take a close look at the job market. Areas with strong employment opportunities or new job openings tend to attract residents and boost housing demand. Check for large employers in the area, upcoming corporate projects, or industries that are expanding locally. City or county economic development websites can be great resources for this. Use real estate platforms like Zillow, Redfin, and Realtor.com to look at home prices, rent trends, and property availability. Comparing these metrics over time helps you see if the area is appreciating or if it's potentially in a downturn. Pay attention to average days on the market, which can indicate buyer demand and help you gauge how competitive the area is. Review any upcoming infrastructure projects, like new roads, parks, or public transit. These can increase the desirability of an area. Many cities publish future development plans that include zoning changes, proposed developments, and budget allocations. These documents are often available through the city or county planning departments. Finally, check safety and education factors. Low crime rates and quality schools are significant attractions for homebuyers, especially families. Resources like Neighborhood Scout or local police department reports provide crime data, while school ranking websites offer insights on educational quality. That's it for today's episode. Mastering local market research is essential to finding promising investment areas and minimizing risk. In our next video, we'll explore how economic indicators like income levels and cost of living affect real estate values. Be sure to subscribe so you don't miss out. Welcome back to Real Estate Things. Today, we're wrapping up with a recap of the key signals and strategies to identify high potential growth areas. By now, you've learned about zoning changes, infrastructure projects, retail expansion, and public amenities as powerful indicators of growth. First, remember that zoning changes are like a blueprint for future development. Areas rezoned for mixed use or commercial purposes often attract new businesses and housing, so keep an eye on planning documents and public meetings. Next, infrastructure is a strong growth foundation. New roads, transit lines, and utility upgrades make areas more accessible and appealing for both residents and businesses. Spotting these projects early can lead to timely investment decisions. Retail and commercial developments are also a key signal. Major retailers and shopping centers don't open without careful market analysis, which can confirm growth in demand for an area. Finally, public amenities like schools, parks, and healthcare facilities enhance quality of life and drive demand. When you see investments in these spaces, it's often a sign of long-term growth. That's our series on identifying future development areas. Thank you for joining us on Real Estate Things. Be sure to subscribe and share this series if you found it helpful. And always remember, Investing with insight is investing with confidence. Happy investing! Welcome back to Real Estate Things. Today, we're diving into risk factors in real estate investment and how to mitigate them. While real estate offers great opportunities, there are important risks to consider. First, market downturns are always a possibility. Housing markets can fluctuate due to economic changes, so it's essential to have a financial buffer. Aim to have reserves set aside for unexpected market shifts or vacancies. Second, environmental risks like flood zones and natural disaster-prone areas can impact property value. Use tools like FEMA's flood maps to assess whether a property is at risk. Properties in these zones may require additional insurance, which adds to your costs. Third, neighborhood crime rates can affect property desirability. Use resources like local police reports or Neighborhood Scout to understand crime trends before investing. Safer neighborhoods typically attract more tenants and buyers. And finally, stay informed about local regulations and property taxes, as these can change over time. Cities with high or increasing property taxes may impact your profitability. That's it for today. By identifying and planning for these risks, you can protect your investment and make more confident decisions. In our next episode, we'll look at value-add investments and how renovations can boost property value. Don't forget to subscribe. Welcome back to Real Estate Things. In today's episode, we're covering renovations and value-add investments, powerful ways to boost your property's value. First, start with small upgrades. Things like fresh paint, modern light fixtures, and updated kitchen appliances can improve appeal without a massive budget. Look for simple, high-impact changes that can make the property feel newer and more attractive to buyers or tenants. Second, consider larger value-add projects, like adding a bedroom or finishing a basement. These changes increase square footage, allowing you to charge more for rent or boost the resale price. Just be sure to calculate whether the renovation cost will yield a strong return on investment. Finally, think about curb appeal. Landscaping, a new front door, or exterior lighting can make a property stand out and improve its first impression. That's all for today. Value-add investments are a fantastic way to maximize your returns. In our next episode, we'll compare real estate markets across cities to identify the best opportunities. Be sure to subscribe so you don't miss out. Welcome back to Real Estate Things. Today, we're comparing real estate markets across cities to help you spot the best opportunities. Real estate isn't one size fits all. What works in one city might not work in another. First, consider cost of living and average property prices. High-cost cities can offer high returns, but they usually require a larger initial investment. Lower-cost cities can be more affordable and may yield strong cash flow, but property appreciation may be slower. Next, look at job growth and population trends. Cities with growing industries and an increasing population tend to attract more buyers and tenants. Check local government and economic reports to see which cities are gaining residents and adding jobs. Also, review rental demand. In some cities, rental markets are strong and offer excellent opportunities for income. High-demand rental markets often have low vacancy rates and steady income potential. That wraps up today's episode. Comparing markets can help you decide where your investment will have the greatest impact. Thanks for joining us on Real Estate Things, and be sure to subscribe for more insights on real estate investing. Happy investing! Welcome back to Real Estate Things. Today, we're comparing real estate markets across cities to help you spot the best opportunities. Real estate isn't one size fits all. What works in one city might not work in another. First, consider cost of living and average property prices. High-cost cities can offer high returns, but they usually require a larger initial investment. Lower-cost cities can be more affordable and may yield strong cash flow, but property appreciation may be slower. Next, look at job growth and population trends. Cities with growing industries and an increasing population tend to attract more buyers and tenants. Check local government and economic reports to see which cities are gaining residents and adding jobs. Also, review rental demand. In some cities, rental markets are strong and offer excellent opportunities for income. High-demand rental markets often have low vacancy rates, steady income potential. That wraps up today's episode. Comparing markets can help you decide where your investment will have the greatest impact. Thanks for joining us on Real Estate Things, and be sure to subscribe for more insights on real estate investing. Happy investing!